What do you anticipate happening to the price of Tesla's stock following the announcement of the Q2 earnings? Investors became highly anxious about Tesla's earnings due to the numerous obstacles the business had to overcome. To find out more about this, keep watching. As of right now, Tesla stock is trading around $800, which is a big change from the previous few months when it was trading between $600 and $700. Investors were concerned because the EV company's shares saw a price decline over a considerable period of time. You can observe Tesla's stock price following the Q2 earnings in today's video. Although estimates for Tesla, the industry leader in electric vehicles, differ, most analysts believe the company's stock price will rise sharply over the coming quarters. Even yet, some contend that the stock of the EV manufacturer is cheap, while others counter that it is overpriced. That's still up for discussion today. Tesla released the shareholders deck and its financial results for the second quarter a few days ago, following the end of the market. Prior to this, Wall Street predicted that Tesla would announce second quarter sales that increased 44% year over year to $17.02 billion, while adjusted FCSBS, the bottom line, is predicted to increase 28% from the previous year to $1.85. Adjusted EBITDA is predicted to more than quadruple to $5 billion. It should be mentioned that in the second quarter of 2022, Tesla delivered 254,695 cars. That was far less than Wall Street's 282,291 estimate, which had already been drastically lowered to reflect the company's difficult quarter as it dealt with supply chain issues and the COVID-19 disruption in China. Although it was less than the first quarter record of 310,048 vehicles shipped, it was still almost 27 more than the previous year, though the focus will be on the prognosis, and if the production ramp up is beginning to gather pace, investors are prepared for a challenging second quarter. It is now expected by experts that Tesla can deliver a record 378,534 vehicles in the third quarter, and then another all-time high of 444,500 through deliveries in the fourth, setting the stage for a substantially stronger second half for the company. If that happens, Tesla will be on track to surpass its 50 growth objective and increase yearly deliveries to above 1.4 million in 2022, 52 increase from 2021. Although Tesla has had many difficulties this year, investors are expecting that these obstacles can become advantages and offer fresh growth catalysts. Tesla announced its financial results a few days ago. The automaker reported revenues of $16.934 billion, or almost $400 billion higher than Wall Street had anticipated, and earnings per share of $2.27 non-GAAP compared to Wall Street's estimate of $1.81. During the quarter, the company's cash position improved by 8 cents billion to $18.03 billion. The automotive gross margin decreased to 27.9 from 32.9 in the previous quarter and 28.4 in the previous year due to increased competition for battery cells and other parts of electric vehicles, as well as inflation. $14.06 billion of the company's total revenue came from automotive sales, with $1.47 billion coming from services and other revenue, and $866 million from the energy division. Additionally, the company's revenue from automobile regulatory credits in the second quarter came to $344 million. This is a $10 million, or roughly 3% decrease from the same period in 2021. During the Q2 results call, Elon Musk, the CEO of Tesla, revealed some encouraging news for the business. According to him, manufacturing at Tesla's new plant outside of Berlin reached a milestone of more than 1,000 cars per week in June. In the next months, he anticipates that output at the company's new Austin, Texas plant will surpass the same mark, with 709 store and service sites for the quarter and 3,971 supercharger locations, with 36,165 total supercharger connections in the second quarter. Tesla has expanded its charging infrastructure more than its store and service centers. These figures show a 34% increase in charging locations and a 19% increase in retail and service center locations year over year. As with 2 additional plants currently under construction in Texas and outside of Berlin, Germany, Tesla has provided soft guidance for a multi-year increase in vehicle deliveries of 50 on average annually. The much anticipated Cybertruck, electric semi-truck, revised roadster concept, and other ambitious projects like the humanoid robot are still in the development stage, according to Tesla. According to Musk, Tesla plans to begin shipping the Cybertruck pickup. That looks like an experimental vehicle in the middle of 2019. What do you think about the constant argument about whether Tesla stock is undervalued or overvalued? Post your ideas in the space provided for comments below. What may investors in Tesla stock anticipate following the release of the Q2 earnings? Recall that earlier this month, Elon Musk, the CEO of Tesla, hinted in a tweet that should inflation abate, Tesla would cut the cost of its electric vehicles. Musk was questioned about this during the Q2 earnings call. Musk declared, "We wouldn't have to raise our car prices if or when we detect signs that the pace of inflation is decreasing. Automobile prices may experience a minor decline, but this is primarily reliant on macroeconomic inflation. It's not under our control. I believe that inflation will start to decrease towards the end of this year, but I would take my prediction with a grain of salt. Commodity prices are definitely moving downward." Sure, but remember to exercise caution. This economic forecast is rife with mistakes. Senior Vice President Powertrain and Energy Engineering, Drew Baglino of Tesla, has the following to say about the supply of semiconductors, battery cells, and other components. With a portfolio that size, there are always challenges. Tesla procures about 600 unique pieces of silicon from 43 semiconductor companies. Regarding the newest generation of chips, things are more steady in terms of cells. We have a comfortable margin because of our partners' record output and line of sight, which matches the anticipated output from both plants. Naturally, we don't anticipate any substantial issues with the components, aside from unanticipated COVID-related shutdowns, because we've expanded cell manufacturing significantly on a rolling 12-month basis and have long-term contracts with all of our partners for essential battery metals. Zachary Kirkhorn, Chief Financial Officer, responded, "Q2 was our largest increase yet over the last handful of quarters on inflation and commodity-related increases to our cars in response to a question concerning how cost inflation was affecting the profitability of these other facilities. Considering that the factories share suppliers or that there are shared problems that affect the entire supply chain, it is distributed quite equitably. As you may recall, I believe I already stated that throughout the course of the previous year, there have been rises. In Q1, it increased, and then it increased once more. In Q2, the pace of increase was higher. As a result, as the year draws to a close, we believe that Q3's inflation-related rises won't be as significant as Q2's. Regarding FSD, the beta version is expected to be made available to all clients in North America prior to the end of this year, in Musk's words. Now that the Q2 profits exceeded expectations, the question is Tesla stock a good buy? New indications of strength in Tesla shares have started to appear. The top producer of electric vehicles has increased its value by almost 11 in the last few trading days due to a better than expected Q2 earnings release. Elon Musk's company has fared better than its competitors in enduring disruptions in China caused by the COVID-19 pandemic, disruptions in global supply chains, and increased material costs, according to the statistics that were disclosed to investors on July 20th. There's considerable incentive to hold on to Tesla shares given its expected production levels and the strong worldwide demand for its cars. A Tesla supporter restated their recommendation to buy the stock, citing strong revenue growth until the end of 2022. Ben Callow, Baird analyst, stated, "We expect Tesla to report strong revenue and higher automotive gross margins over the remainder of the year, setting the stage for further earnings growth. With a $950 share price objective, Bank of America analyst John Murphy believes that Tesla stock will likely be in a holding pattern in the foreseeable future." He writes, "Despite the relatively good 2Q22 performance, we have trepidation that Tesla stock may already be priced for perfection, or at least priced for hyperbolic growth, such that near-term earnings beats may be insufficient to get bulls incrementally positive. All things considered, Tesla's most recent financial report gives us good cause to continue to be positive about the company's future. When the company announced its Q2 earnings, Tesla shares was trading at roughly $740. The stock was trading around $800 the following day. At the moment, the stock is trading at $816.73. Check out our other videos on our channel for more information about Tesla stocks.